Hey guys, what's up and welcome back to the channel, 10 Bagger Stocks. It's good to see you guys again. Like I said, I'm going to try to keep uploading a little bit more regularly. In my last video, I took you guys through 7 growth holdings that I have in my portfolio. And I kind of discussed my strategy about the barbell a little bit. So today I'm going to take you to the other side of that barbell and show you some of the dividend stocks that I currently hold. Now, the point of investing in dividend stocks is so that in the future you have an income produced passively just off investments that could potentially replace your full-time income, thus making it a lot easier to separate yourself from work and retire. So basically, yeah, that's it. So today I'm just going to take you through 5 holdings I have in my dividend portfolio, and let's get the discussion going in the comments. And if you guys have any input or any stocks that you're looking at right now, please leave that down in the comments. And don't forget to drop a like because that helps me grow this community where we can all discuss stocks and investing. Alright, so that's it. So we're going to jump in the video, and I hope you have a great day. Okay, so again, the bare bones of my strategy is that I think of my portfolio as a barbell. On one end of the barbell, I hold medium risk, high growth stocks, and on the other end of the barbell, I hold low risk, medium growth dividend stocks and REITs, or REITs, which are real estate investment trusts. The low risk medium growth side of the portfolio seeks to match the performance of the S&P 500, which is around 10% a year, but with a much higher dividend yield, so I can produce an income off it without actually having to sell any shares. But because I'm only 25 right now, the majority of my savings goes into the growth side of the barbell as I try to build capital for the future. But as I get older, I plan on adding more and more to my dividend portfolio, as I expect the income yielded from this portfolio will one day be able to replace at least most of my full-time income. In this video, I'm going to share with you 5 of my current favorite dividend stocks that I own, which isn't my whole portfolio, but comprises the majority of it. Okay, so let's jump into stock number 1, which is Abbvie, or ticker ABBV. Abbvie was a spin-off of Abbott Laboratories and houses a research-driven business model. Abbvie is focused on creating new drugs and has many in the FDA pipeline, but currently their cash cow is the top-selling prescription drug in the USA, Humira, which helps treat arthritis. Abbvie has a payout ratio of only around 50%, which means they only share 50% of their earnings with the shareholders through their dividend. This means the company has plenty of capital left over to handle other aspects of their business, which is good because although the company is highly profitable, they do hold quite a bit of debt that they should look to decrease over time. Despite the high debt levels, the company's strength relies on their ability to generate a large income through the drugs that they create, which reach millions of people. As long as they continue their success in this category, Abbvie will continue to be a fantastic dividend investment, and their 5.2 dividend yield is very safe. 5.2% dividend yield is very safe. Just to show you guys, for example, $5,000 invested in this stock would yield $260 a year, which I think is enough to cover both Netflix and Hulu. In my opinion, ABBV is a solid long-term core investment for any dividend portfolio. The next stock that I'll discuss is retail giant Walmart. Walmart has a little bit of a lower yield of 1.6%, but more than makes up for that through their history of share price appreciation. Walmart recently initiated an online program similar to Amazon Prime called Walmart Plus. I expect Walmart Plus to be a major player in the e-commerce space going forward, which includes grocery delivery. This is due to the fact that they already have an immense distribution channels through their expansive 11,501 stores throughout the world. Walmart has more than a decent balance sheet and generates an immense income of almost $18 billion a year. If entering the e-commerce space moves the needle for them in the income category, I expect share price will certainly appreciate. This is because the company certainly does not trade like a tech stock with a PE ratio at a reasonable 21.7. The stock price certainly has room to grow considering how the market is pricing some of these e-commerce players. The next dividend stock is Raytheon Technologies, or ticker RTX. The ticker RTX was created after a merger between Raytheon and United Technologies, which occurred in April. The stock is a dividend aristocrat and has the balance sheet to back it up. The stock is currently trading at a discount to what I believe is fair value because of its exposure to the airline industry. Although the company is highly diversified among different industries which are less affected by COVID than the commercial airline industry, the stock is still taking a hit since the coronavirus. The stock currently yields at the stock currently has a dividend yield of 3.1%. And has raised that dividend for quite a few years in a row, making it a dividend aristocrat. And because the RTX share price is currently a little discounted, I believe that it's a really good investment compared to some other investments out there, and you should expect to see long-term capital appreciation as well as dividend growth. RTX is a solid holding for any dividend portfolio. The next dividend stock I want to discuss is JPMorgan Chase, ticker JPM. JPM has an insane income statement, producing an income of $23 billion, but a reasonable PE ratio, which is currently at 11. This is well below the average of the S&P 500, which is around 28 as of September 2020. JPM trading at a discount currently is due to low interest rates affecting their ability to produce an income from loans they extend, as well as worries about the foundation of the economy right now. I personally believe these worries are a little bit overblown, and this is because JPM is a AAA quality investment and will continue to appreciate and pay a strong dividend for quite some time. I expect JPM to continue to outperform other banks in the financial sector, despite low interest rates, as they have quite a diversified model for generating income. JPM currently produces a high dividend yield of 3.6%, and I believe this stock will be a high compounder for me for years to come and is currently undervalued. JPM is a very safe place to park money for the long term right now. The last dividend stock I will mention in this video is Microsoft. Microsoft produced an income of $44 billion in the last 12 months and has a PE ratio of 35, which is fairly reasonable when compared to some of their tech peers. I expect Microsoft to continue to succeed in a world that relies more heavily on cloud and software services. Microsoft will continue to generate an insane income and maintain their fortress balance sheet, which will only lead to continued share price appreciation as well as dividend growth. In my opinion, Microsoft is one of the safest individual stocks to park money in all of the market and may be able to produce quite an income for investors in the future. Before I go, I just want to highlight the power of dividend investing. $10,000 invested in each of these stocks, which would be a portfolio of $50,000 total, would produce an income of almost $1,500 per year, which represents just under a 3% yield. This amount can of course be reinvested back into the portfolio for further compounding returns. If you keep this process going for a long time, there's a very good chance that you'll be able to generate an income which replaces your full-time income. It may take a long time, but everybody has to start somewhere. Alright guys, that's my video about dividend stocks. I hope you found it useful. If you want to discuss investing strategies or see my complete portfolio each month, feel free to follow me on Twitter at 10xbaggers or comment down below. I'd love to hear your thoughts on these dividend stocks or dividend investing in general, or any stocks you're looking at right now. Until next time, all the best and happy bagging, folks.